Welcome back to the show. I am super excited for this week's guest. I follow her on Twitter. You should too if you're not already. Her name is Amy Nixon, and she is a housing and economic analyst. You might have watched her on Fox Business, and she's going to update us on the state of housing and the state of the economy, but also a little bit of Bitcoin talk. So Amy, thanks so much for joining me.
Thank you for having me.
Okay, let's get to know you a little bit because some people, again, might be familiar with your work. You might be new to some people, especially those just following Bitcoin Twitter really closely. Tell us where you're from, what you do, how you got there.
So I'm actually from Chicago originally. I grew up in the Chicago area, and my background is in marketing and journalism. But I found my way to Dallas. I have been a stay-at-home mom actually for the last 10 years. And during this time, I have an economics degree, and I sort of floated back to that. When we moved to Dallas about 5 years ago, our housing market here was nuts. And I started just researching and digging into what was going on. And I started posting on Twitter. And that was in, I think, 2020. I started my Twitter account, and it really blew up in 2022. And it's sort of, it's been history since from there. My career has really expanded and grown, and it's really been a fun journey.
It's really been inspiring to see. I saw you start to do some segments on Charles Payne's show. I sometimes go on it too. And I was like, oh, she's really got her finger on the pulse of what's happening with housing. Because one thing that I think happens a lot is when you watch mainstream media, the consensus is everything's great, soft landing, everything's good. But when I talk to people, when I read articles that I think are telling a little bit more of the truth and peeling back the layers, it's not that way. A lot of people are really struggling, and inflation has run away in a lot of different areas, even though they say it's come down. But for really important things like housing, rent, a lot of people have not been able to catch up to where prices have been going with what their wages are. So I guess let's start. Zooming out, when we look at the country right now, what is the state of housing in your mind?
Housing is my passion for housing is actually rooted in what you're talking about, and because particularly it impacts young people, and that's just because they don't own assets yet, and they haven't had a chance to buy housing. And really, the last 4 years have been a horrific housing market for young people. The early 2 years of that, it was bidding wars, insane competition with institutions, and a crunch of supply. And then the last 2 years, it's been record high unaffordability that we haven't seen since the early 80s. So right now, I would say our shelter component of inflation is the main problem with our CPI. And if you look at the data that's coming in, CPI is in the threes. Shelter has been over 5 consistently since 2020. This is like an insane amount of persistent shelter inflation. And I would compare it in a macro sense to the 1970s. There was oil was the persistent piece of inflation that was not responding to monetary policy. Today, that is shelter. That is the persistent piece of inflation that's just not been very responsive to the rate hikes. And for the same reason as oil in the 70s, it was supply shocks that caused that to sort of override any monetary policy that we had back then. It's the same exact story with housing. We fundamentally have a supply and demand problem. And I do want to clarify, there's a lot of people you'll see post charts on Twitter about housing units per capita to say, we have built housing. We have, X number of housing units for X number of people, and it's at record highs. That only matters if we're sort of a communist state assigning one house per household. And that's not the way that we're using our supply. We've got currently 2 million homes being used as motels or Airbnbs. Mm-hmm. Those are not supply that families live in. We've got also demographically people living alone more than ever. So whereas a house used to house maybe 4, 5 people in a family, now you're seeing a break off of that. And so we need more units than we ever did. We've got record high immigration, also creating more pressure for housing units. And the biggest thing of all is we have the 2 largest generations, boomers and millennials, at their peak. Boomers are aging in place. They're not giving up housing. And in many cases during the pandemic, they bought second, third vacation homes at record levels. We have more people that own 2 or more homes than we've ever had. And we have millennials coming of age wanting to leave their households, leave their apartments, and buy homes and form new households. And we just don't have the supply to meet that demand for all of those things.
Coin Stories is proudly brought to you by Bitdeer, a global leader in disruptive technology for Bitcoin mining and AI. As a publicly traded leader, Bitdeer boasts a massive 900 megawatts of operational data center capacity and an additional 1.1 gigawatts under development across 3 continents, positioning Bitdeer as one of the most diversified and power-dense computing companies in the world. Bitdeer's leadership laid the groundwork for the original advancements in Bitcoin mining ASICs. It's really the only company in the industry with the track record and clout to disrupt the market again with groundbreaking new designs for the next generation of mining ASICs. Now, Bitdeer is leveraging years of expertise in data center and cloud management into high-performance computing through a recently announced partnership with NVIDIA. Join Bitdeer in reshaping the world of Bitcoin mining. Learn more at bitdeer.com and explore how they are pioneering the future today. It's funny, I've shared this on my show before, but I've looked at some homes recently. I really want to purchase my first property, but I just don't think it's the right time in the market, and maybe I'll get your take on that. But when I go to open houses, it is all people in their 60s, 70s. There's no one in their 30s like me looking. And I'm like, why is that? If you rewound time, I feel like if it was the 70s or 80s, you would see a lot of young couples trying to purchase their first home. And it was pretty affordable on just one income. And fast forward today, most people actually find it is better and more convenient and cheaper in some ways to rent, even though rents have gotten to a place where I literally don't know how people can afford in a big city to live on their own at the cost of a 1-bedroom unit in places like LA, where I used to live, or New York or Chicago. What's your take?
We've also had record high rental inflation over the last 4 years. Like I said, it's been shelter inflation across the board. And a lot of that had to do with the pandemic because that spurred new household formation. We had people moving out of, their parents' home to sort of isolate from that whole pandemic, everybody get, 6 feet away movement. And also we had migration to new parts of the country. So we had people with high incomes entering markets that traditionally supported lower incomes.
Yeah.
And that gave a lot of pricing power to builders and to existing homeowners because suddenly they had a new pool of high income demand.
Mm-hmm.
And we've seen that ripple across the entire country in very negative ways for the people who live in those towns originally, because they're finding that they're priced out. And now, that continues to be a movement where now they're going out further into exurbs or they're moving to the Midwest. Everybody's trying to look for where affordable housing can be found. And it's like a trickle down effect of migration towards more affordable housing. But like you said, right now, in terms of affordability, it is a better deal in pretty much every region of the country to rent versus buy, just in terms of what your monthly payment's going to be and what you can get for that monthly payment. You will save money and get more house or apartment than you will if you buy.
When you speak about migration, I just think of all the people who moved to Texas, where you're based, right? And Florida during the pandemic. I also left California because the cost of living was getting extreme. I felt like the quality of life was just deteriorating at a faster and faster rate. So I moved back to the Midwest, and one of the benefits was the cost of living. I saw a drop in my rent prices and all that, but it has created some pressures locally. Although I've seen you and some other analysts tweet that now things are starting to change a little bit. All these Airbnb places that people bought up thinking, oh, they're going to have someone, renting that out every single week. That's not happening. They might have to sell those properties. So can you talk a little bit about the shifts that you are seeing? Because again, they're telling us strong economy, everything's great, but there are some cracks under the surface.
There are. And again, it goes back to what I opened with, which is supply and demand. There are areas of the country where we have been building a lot, and we started a boom of building in the Sun Belt in 2020, and that continued through 2024. And those regions now have pretty good amount of supply relative to, I think most of there's many areas of Texas that are back to pre-pandemic levels. There's areas of Florida that are back to pre-pandemic levels. And a lot of these areas were also areas where investors were speculating heavily. So you'll see listings for sale tend to be homes that were bought in 2021, 2022, that maybe they thought they could rent out for X dollars, or they thought they could Airbnb for X revenue. And they're finding now with this higher interest rate environment, they're not getting the revenues that they hoped. So I would say if you're looking at the next 6 to 12 months to purchase a home in a Sunbelt region like Texas, Florida, look at the inventory available in your region. Look how rapidly it's rising. Look at the percentage of homes with price cuts. I think those will all tell you a story of negative pricing to come in a lot of those places. And I'm expecting that honestly in Dallas. I think we will be negative probably by next spring in terms of pricing. Now, I'm not saying that a crash in the next 6 months, because it's not. Housing moves really, really slow. But even just to get a couple percentage points drop, I mean, on a $500,000 house, that's $25,000, $30,000. It's a significant amount of money.
I know a lot of people watching this or listening to this, they might be waiting for prices to come down, but is this more of a local story based on supply and demand and where places were sort of overdeveloped and there isn't enough demand? Or is this more of a national story where some people are afraid or expecting there to be another 0809 type housing market crash that will wash away some of this, but also maybe make it more affordable for young people to finally get into the market?
I think it's probably going to start playing out more regionally. And the reason I say that is because while there was some speculation this cycle that does remind people of '08, there also is just a different macro backdrop than we had in '08. We had high inflation, we had interest rate hikes, and most importantly of all, and I'm sure that you're well aware of this on this channel, we printed trillions of dollars in the wake of COVID. And that money permanently settled in a lot of assets, and it's not going to revert back to pre-pandemic levels. We just have more money in the money supply now. Mm-hmm. So we did not do that in 2005, 2006, 2007. We did not spend and print that level of money that we did this time. So I think a lot of areas that have tight inventory still are going to be relatively safe, particularly in terms of like a crash scenario, because this is simply a lot of money supply chasing limited assets. And if you're in a place like California where they're not, I think San Francisco recently just permitted 1 unit of housing last month, 1. If you're in an area like that where they are not creating more assets and there's more capital chasing those assets, you're just not going to see prices come down.
Amy, have you seen the viral clip from there's a politician in Canada, Pierre Poilievre, and he had this amazing clip where he talked about how much money from building a house just goes to paying fees and essentially bureaucrats. It goes to the government side and nothing productive. It's not the actual people that are pounding, the wood in and the nails in and actually constructing the home. It goes into the bureaucracy pool. Is it the same, do you know, here in the US? And does that really hurt people in terms of being able to afford a home?
I don't think we're quite as bad as the Canada, but we do have issues, especially with our home building. There are problems that have emerged in the last, I would say, 15 years. There's a lot of red tape. There's a lot of barriers to building. And also home builders are increasingly beholden to shareholders, not customers. So we have seen things like in the wake of '08, they did not want to see a repeat 2008. So rather than build a ton of supply that would have been great for customers and lowered prices for customers, they kept supply pretty constrained and modest. And they're doing things like buying back shares of their own stock rather than investing all of that capital in building something maybe a little bit nicer than an 800 square foot box in San Antonio, which is some of the product they're putting out right now. I mean, the houses being built today are just not the quality of what we built in the 50s and the 60s and the 70s. And again, that makes me a little nervous for areas like California and New York and places where we have these beautiful old homes that were well constructed.
Mhm.
It's almost like those are becoming rare assets, and money is going to fight for them because what we're building today does not compare.
I'm so glad you brought this up because this is something that I've found in my house hunt journey as well. I actually spoke with a real estate agent here. Fascinating conversation. He talked a lot about the history of St. Louis. For those of you who follow me, you might know I live in St. Louis, and he said that when St. Louis was experiencing kind of an economic boom in the early 20th century, we had like the World's Fair here. It attracted a lot of these great builders and artisans, and things were made really, I mean, it was quality. And so the 100+ year homes today are better and are actually, they don't need as much maintenance as some of the newer homes that were built. And so there was this period of time up until basically World War I where these homes were just built so sturdy and so quality with like some of them have stained glass windows and arches and just so cool looking and have just lasted. And then he said the GI Bill passed in response to World War II, and all these homes came in and they built them much more cheaply. Those are a lot of homes that were having problems. And then there was another wave of better construction, and then it's fallen back, and some of the worst homes are just being put up super quickly. And the home builders are essentially just waiving any liabilities. They won't, some of them won't allow you to bring in your own inspector. I won't say the home builder, but I mean, I've heard some crazy things. Why is that, and what is the fix?
I mean, it comes down again to shareholder value and profits. Everything has become about maximizing profits versus building quality things. And when you have a highly financialized economy that runs on fiat, that's what you ultimately end up with. Everybody's trying to get the bottom line cheaper, as cheap as possible, maximize the price, maximize the number of sales. Quality sort of goes out the window. And um, it's interesting that you mentioned St. Louis and also 100-year homes. My husband and I owned one home, and it was a 100-year-old home in the Midwest, and we had zero problems with that house for the entire time that we owned it. The bones were awesome.
Yeah.
It was really well constructed home. And also St. Louis right now, the market is currently pretty hot.
Yeah.
The reason why is because of what I was talking about earlier. Investors and buyers have shifted to the most affordable markets in the US every year that rates have been hiked. And this particular year, St. Louis is a hot region because there is still homes you can buy for less than $200,000, which
Yeah.
isn't anywhere else in the country for a lot of parts of the country. So a lot of investors are moving in on St. Louis because it's another affordable region that hasn't sort of been tapped yet.
Oh yeah, I'm familiar. I mean, most of the homes they go to pending right away. Some of
Right
them
away,
no
bidding wars.
contingency, all cash offer, sometimes over asking. It's like we're probably looking in the wrong place. Actually, I don't know if you've seen this, but I think because of the algorithm of all these social media apps, they're showing me these pages, especially on Instagram, where it's like new home builds, and a lot of them are actually in Texas. Okay, I'll have to send you them after this call or put some up on the screen just to show you beautiful homes. They look amazing. It's like drone shots that are taking you through. They're 30 minutes to an hour outside of Dallas and like 400, 500,000, but they look like mega mansions. Are those legit, or is this a situation where you drive out there and like this is not a place you want to live and it's going to fall apart in 2 years?
A little bit of both. I mean, it's not that extreme, but I would say that generally those are far exurbs. So while you will have a beautiful home, you will not have road infrastructure that's
Okay,
yet
great.
around you. There will be a small country road exiting that giant subdivision that will eventually widen into a 6-lane highway. But for the time being, horrific traffic. There won't be, there will be strain on the electric and the water and all of those systems until it gets caught up to the amount of homes being built. So those areas will have like an adjustment growing period that's not fun. And
Mhm.
also build quality, depending on the builder, there are some that are still building quality, but not for $500,000.
Yeah.
But
And
if
look,
you're getting a 3,000 square foot home for that price in Texas today, it's probably not high build quality. And part of that has to do with just labor shortage.
Yeah.
We've been labor short since COVID.
And the supply, I mean, all the supplies to build a home, everything's gotten so much more expensive with inflation. So I'm like, how did they build this thing? But they make it look really incredible. And I have a feeling my gut was right. Let's talk a little bit more about Airbnbs, because so many people did want to go that route because they saw a lot of people making easy passive income. Oh my gosh, all of a sudden you use one and then you leverage that to get another one. And all of a sudden you have 10 properties and you're off on a yacht in Europe, right? A lot of people thought that this was going to be what happens. But now I'm starting to see some of these horrible stories come out where people can't fill them, they're losing money. And this does have consequences as you go down. It trickles down to really the leverage in the system and the banks holding the bag.
Yeah, this was kind of like what flipping was to the '04 to '06 is what Airbnb was to the 2020 to 2023. It was kind of like the new how to get rich quick with housing, and interest rates were rock bottom. It fueled a bunch of people excited to take out loans and buy a bunch of investment properties. You can make a lot more money if you rent a house out for $200 a night than if you just rent it to a family for $1,800 a month. So Airbnb was lucrative to new investors, and a lot of them just sort of jumped in and took out loans that it's important to understand too with Airbnb that it operates like commercial real estate, even though it's residential real estate. So the loans for Airbnb are sort of in between a commercial real estate loan and a traditional mortgage loan. They're in terms of risk. Because right now there's a lot of trouble in the commercial real estate sector because many of those loans are floating rate debt.
Mm-hmm.
With Airbnb, a lot of people used DSCR loans, which are basically debt service coverage ratio. You're taking out the loan based on what you think your revenue is going to be on the property, not your income. It's a little bit more like those riskier loans that we had in '08.
Oh, wow.
And if you're not getting the revenue on the property, like consumers pull back spending, we have a recession, people just flood your area with too many Airbnbs and your property isn't getting booked, you're not going to be able to make that coverage on your loan. And those loans, I think at least a quarter of Airbnbs that were bought in that period, like 2020, 2021, were using that type of a loan. All of those people are kind of on a running clock right now in terms of how long they're going to be able to stay afloat with a property that's not getting a lot of bookings. So it's not to say there's going to be Armageddon for everybody who owns an Airbnb. There's obviously some properties that people bought years ago. They have a ton of equity. They have a low fixed rate. It's a popular place that people like to vacation. That property gets a lot of vacationers. They're fine. But if you just bought some generic property, you did no research, you have no experience in the hospitality industry, and you stuck a couple knickknacks from TJ Maxx in there and posted it in a crowded area,
Yeah.
the odds are not good that you're going to make it as an Airbnb host. So, yeah, I think we have started to see a lot of those properties come back on the market and get absorbed. But unfortunately, I think a lot of people hoped we would see those properties hit the MLS and go to a family.
Mm-hmm.
And instead, what you see is those struggling Airbnb operators call up their investor friends and say, hey, you're running 50 Airbnbs, want to buy my 3 failing ones at a deal.
It's time for a quick break to hear these messages from my partners who make this podcast possible. Next up, Bitcoin 2024, the world's largest Bitcoin conference, is coming to Nashville this month. Join us for 3 amazing days of keynotes, panels, networking events, and my Women of Bitcoin brunch. The Bitcoin conference is where I launched my podcast 3 years ago. So you never know what can happen or who you can meet here. Head to b.tc/conference and use code HODL, HODL, for 10% off. Next up, Speed Bitcoin Lightning Wallet, one of the fastest growing wallets out there. Speed is a secure, low-cost way to send or receive Bitcoin instantly. It's super simple and scores high user ratings. You can even use it to shop gift cards of your favorite brands and earn rewards. Download Speed using the QR code on the screen or the link in my show notes. Coinkite makes everything you need to safely self-custody your Bitcoin. including the Coldcard wallet. That's the cold storage device I use for safekeeping my Bitcoin. You can verify the source code, it's ultra secure, and it's easy to use even if you're a beginner. Head to their site in my show notes and get a 5% discount with promo code CoinStories. And finally, the why of Bitcoin is easy to grasp, but the how can be so confusing. The Bitcoin Way is a professional Bitcoin IT and security team offering personalized one-on-one support that guides you through cold storage, setting up nodes, inheritance planning, privacy best practices, and more. Don't take my word for it. Take 82-year-old customer Bill's.
Give the Bitcoin Way a try. You will be well on your way to owning and protecting the greatest money ever discovered.
Set up your 30-minute free consultation today. All right, back to the show. Right, which only concentrates, again, wealth even more. And I think you've been tweeting recently about this bifurcated economy. For some, everything's great. I mean, for people who own assets, you've benefited tremendously from all the inflation. And boomers have done great. And people who locked in those low interest rates and are living in their home, why would they sell? But there are so many young people who just want to catch up. I own Bitcoin, but I can't live in it. That's why I really want to own property. I want to have my dream home someday. So what do you think it will take for young people to be able to afford the dream home that was so much easier for their parents? I mean, some young people today with dual incomes are making a ton more than their parents did on one income, and they can't afford a nice home. So how do we address that?
I think the path to homeownership is going to be trickier for this generation. And I do think in some ways the Bitcoiners are onto something with, at this period in our America's history, with the way our demographics look, with the way our interest rate situation looks, it may be wise for young people to start looking for alternative investments and assets to use to grow their wealth while they rent. And try to, I think in a lot of ways, if you are wise investing your money while you are renting, you will come out ahead of somebody that just stretches to the max to buy a home at these prices with these interest rates. Because I think probably for the next 4 or 5 years, returns on housing are not going to be like these amazing, especially if you count for inflation. I think what we're going to probably see is nominally pretty flat, which means in real terms, negative. And I think there's a lot of other asset classes out there that are going to perform better than that. If you can just rent and take the difference and invest it, that's going to give young people a better chance.
So am I hearing that you are possibly a Bitcoiner?
I like Bitcoin. I do like Bitcoin for 2 reasons. And one of them is the one I just sort of highlighted. I think for young people today, we're looking back at what the boomers had in terms of opportunity. And they had this thing in the 1980s that cost $60,000 that they could buy. And 30 years later, it was worth over $1 million. This house that they bought in California or New Jersey or wherever they bought a home. I don't know anymore that housing, when you look at our long-term demographic picture, like beyond the next 5 years, like to 10 and 20 years out, it doesn't look good for housing when that boomer generation starts to die off. So I don't know that housing is going to be that return yielder that it was for the boomer generation. So then we have to look around and see what other, what thing that exists today that costs $60,000 might be worth $1 million in 2040. And I think Bitcoin is certainly a contender. When you look at its chart history, you look how it's performed, you look in particular how it performs in a high fiscal spending, high government debt environment. I look at it as like a hedge against the fact that the government will print more money and devalue our currency. And if you think that that's going to happen, you want to buy hard assets.
I totally agree with you. So did you say the second reason? I don't know if I got that. I feel like that was still the first reason, but I guess that
is still the first reason. The second reason is a little bit deeper, just about the way that I feel about how our government has handled our money and our currency over the last 30 years. Honestly, I don't know if you've read Oscar Wilde. I think the best analogy is basically for the last 20 years or so, we've had various iterations of Dorian Gray in the Eccles Building, in the halls of Congress, committing all kinds of sins against our currency. And they've come out into the world and they've said, look at how prosperous our country is. We're still doing great, relative to everybody else. Our currency is a winner. And Bitcoin is that painting up in the attic. Its price action chart is that accountability. Every single time the government or the Federal Reserve does something to debauch and debase the value of our currency, Bitcoin's price action chart marks it.
Mm-hmm.
So if you look at Bitcoin's price action chart and you think this is so volatile, this is risky, I don't like it, it's just a reflection of what's happening to our own money, to our own currency. And that's probably why, the government doesn't like it. They sort of keep it separated out, hidden in the attic as much as they've been able to. They don't want to face it or deal with it. But that's what it is to me. It's accountability. It's accountability in a country that frankly has needed accountability with our spending for the last 30 years.
That is so beautifully said. I love your analogy. You brought up such great points. I'm sure the Bitcoin Twitter or X will love this clip. So let's talk about the next couple of years. I know that neither of us have a crystal ball, but you follow this so closely. Some people are expecting giant rate cuts. Some people are expecting a massive crash. Others are expecting the S&P to hit 9,000 in like a year. If you really had to play things out over the next 6 to 12 months, what do you expect? Because at some point, I feel like it is unsustainable. The amount of debt, how much we've blown up this bubble, the leverage in the system, something's got to give. But then on the back end of that, they're just going to print, right? And devalue the currency, which you've been talking about. No one takes responsibility. And this isn't a left or a right thing or red or blue. Every politician continues to spend. I mean, they pretty much have to keep this thing afloat. So what do you see as you look out? What's your forecast?
A long-term, all signs point to devaluing the currency, inflating away the debt. That's my long-term outlook. In terms of the next year or so, I think that we have entered a higher for longer interest rate regime. The ZIRP era is over for the near future. We may see, I do believe we're going to see an interest rate cut before the election. We may see more cuts next year, but the Fed funds rate is going to be higher than it was in the 2010 decade. We are going to be in an era where we are trying to keep that base rate a little bit more elevated. I don't believe we're going to go back to just cutting and cutting and cutting and cutting to new lower lows with those interest rates. And to offset all this in this sort of new higher rate era is going to be more fiscal spending. And it's in some ways it's similar to what we had in, I would say, like the post-war 1940s, early 1950s. It's just a government-driven economy. It's fiscal spending sort of running the show, and interest rates are a little bit higher than people are used to, at least during the last 10 years. But they're not going to, I don't know. I think it depends. I'm still not sure that we're totally done with hikes in terms of the next 2 to 3 years. I think like I said, we will get a cut before the election, but I'm not convinced that we won't see inflation re-accelerate at some point then in the future and need to hike again in this decade. Which would be consistent with prior inflationary decades. Usually inflation's not beaten in 3 years or less. So we'll see with the long-term rate trajectory. But I think the most important takeaway is that we're not going back to that ZIRP policy anytime soon. We may see a cut or two, and fiscal spending is going to stay high. We have no debt ceiling. And there's a reason for that. And so we're going to see just a little bit more the government steering the ship for the economy, which is going to look a lot more like what we have, like more of the same of what we have right now, which a lot of people don't like. But
So that's the fiscal dominance that a lot of analysts like Lynn Alden and Luke Roman are talking about. Nothing stops this train. It's really troubling to see just how the deficits are getting blown out. We're not even responding to a recession. Things are quote unquote strong, and we're just going further and further into debt, and we're servicing that debt at these higher interest rates. And it's just like how they're burdening the future generations and destroying the currency, destroying the middle class, making everyone more dependent on a bigger and bigger government. The employment numbers, it's just a sign basically of the government ballooning in size and a bunch of public workers taking on jobs. I mean, this is not what America was supposed to be. And I think a lot of people are feeling frustrated. I'm not surprised that we see an increase in populism and people just so fed up. They think politics is the answer. I don't think it is. I think it's solving the money and the incentives at the core of the entire system. That's why I love Bitcoin. But it's like you can understand people's frustrations because they're going to need stimmy checks again soon to just afford the cost of everything staying afloat because of the fiscal spending.
I agree. I think this environment's ripe for populism. I think in a lot of ways, these weird crypto meme coin things are kind of a form of financial populism. It's just people are in the middle class are frustrated. They don't have a way to get ahead on wages and labor alone. So they have to look for these other sort of lotto ticket assets. That's why you're seeing the FOMO into the GME stocks and into the new meme coins created on Solana every day. Like you can't even keep track of all these things. But that's a sign of a desperate people that are looking for a way to survive in an economy that just has a widening wealth gap and a further devaluation of currency. This election, and you didn't specifically ask about the election, but I think regardless of who is elected, I don't see a path forward that's not inflationary.
Yeah.
And whether that's inflation in CPI or alone or asset prices or both, we will have one form at minimum of inflation in something in one of those. And I think that a sad reality of just where we are right now as a country. I don't think, unless Ron Paul runs again, Paul's a miracle. I don't see a candidate that's going to give austerity that we need to try to get away from really the reality of what happens in all fiat-based currencies, which is you ultimately have to inflate the debt away.
Right. No, you're so right. And it makes me think of the book When Money Dies, talking about Weimar Germany. And there was so much speculation during that time, people gambling and the stock market was going crazy. And those were the seeds of hyperinflation. And I know we're not there yet, but even Jack Dorsey has tweeted like hyperinflation is here. It's kind of under the surface. And a lot of it there's just the dramatic rise in the price of assets that is really the 1% is just killing it right now at the expense of everyone else. So it is important. I hope with my show that I help educate people, get your hands on some hard, scarce assets. And the only one that I know of that you could buy literally a fraction, like $1 worth today, is Bitcoin. You can't buy a fraction of a house in Dallas or a New York skyscraper. If you're in the developing world, you can't buy shares of Apple stock or property. I think it gives a lot of hope because we're at an inflection point and things are changing. You cannot keep this ship afloat on all of this debt. We are an empire of debt, and something's going to give. And what's going to give is the currency and the working class's ability to save for the future unless they protect themselves.
I agree. And that's, generally I don't tend to give like specific investment advice online, but when people ask me, I don't like this answer because everything is at near all-time highs right now. Everything does seem like it's overvalued, in the short term. And I do think there is a possibility that we could have a recession in 25. I don't know how mild or extreme. I do think we could see a stock market and probably corresponding risk asset pullback alongside of that. But that's all, talking about the next 6 to 12 months. Talking about the next 5 years, you want to be buying assets right now. I don't care if it's a share of stock. I don't care if it's Bitcoin. I don't care if it's gold. Whatever it is, you want to be buying assets right now to protect for what is in my opinion, there is no avoidable way to see that our currency is going to be devalued in the longer term. No way, unless a reset. A reset's the only alternative I can think of, but that's going to be, kind of like a black swan thing that nobody's going to be able to predict.
Yeah,
how or when it happen.
You're so right. Wow, I feel like I could talk to you forever. Anything that we haven't really touched on that you'd maybe like to explore a little bit deeper?
No, I would just say, especially since, I primarily talk about real estate, I do want to address young people who are in a position right now who don't know what to do with shelter. They're renting, they want to buy a home, they're not sure. I want to reiterate what I just said about my general investment advice, which is 5-10 years from now, everything's going to be ahead in terms of like fiat dollar value than it is right now. I cannot speak to the short term as easily. There's going to probably be pullbacks in prices in certain regions. Yes. So I can't guarantee you, when you're going to get the best entry point price. But if you find a home that you love and you have a family and you want to live and have shelter stability, you want to lock in a fixed rate payment, because fixed rate low or lowish rate debt is also good in an inflationary environment. It's okay to buy a house now if you find those things and you find a place you want to live and raise your family and you feel like you're going to stay there for 5 or 10 years. I do not think this is like 2007. I do not think this is a horrific time to buy a house. I just don't think it's a great time either. So I would say there's not an easy choice right now between renting and buying, but it is okay to buy. And if you don't buy, and if you say, I'm just going to rent, buying's too expensive either because you're priced out or you just don't want to pay these prices, please invest the difference in assets. Buy something, share a stock, Bitcoin, gold, please. Because if you don't do that, you have zero protection against currency devaluation.
That's such good guidance. And I feel for those people because I feel like I'm one of them, not knowing really what to do. I don't want to sell my Bitcoin, not at this price and what the homes cost. But then if you sit around waiting for an 07, 08 crash, it's not going to come because assets are going to continue to inflate compared to the currency. So it's like, when is the right time to buy? A lot of people are wondering, and I for one am going to wait it out a little bit longer. But that is the one thing I would sell some Bitcoin for, is to have my dream home. I hope it happens someday. I hope I can help my family with that. And that's really, it comes down to just feeling like you have hope. I think the one thing that would make the world a better place is if the average person had more economic empowerment to think, you know what, I am working hard and it will pay off. I will advance to the next level. I will be able to afford my retirement. I will get my home. And I think for the last 2 decades, that has been deteriorating faster and faster. People are like, no matter how hard I work, I will not get it. So why not just become a nihilist? I'm not going to have kids. I won't be able to afford them and put them through school. I'm just going to have my nice trip and spend now, think about, the future later, because I don't know what's going to happen. And that's so sad. That's not a way to build our country. That's not a way to secure a future. That's not a way to ensure prosperity and opportunity. It's just sad, and I hope we can right this ship, because our country stands for such beautiful values, and we've like pushed them aside for so long.
I agree, and I do want to say that too in terms of the nihilism. I do want to speak to that because I feel like it's almost irresponsible for me to just come out and say buy assets without adding this important caveat. Do not buy assets with excessive leverage.
Yeah,
especially Bitcoin.
Yeah.
I do. As much as I like Bitcoin, to be honest, it trades honestly like a 3x levered NASDAQ already. Mm-hmm. So it's when you have an asset that's volatile, even if you think it's going to go up long term, next 5-10 years,
don't use leverage.
You will get washed out in a correction and you will have zero. Mm-hmm. If that happens to you, you lose it all. Yep. So people's goals right now in accumulating assets, whatever asset it is, stocks, Bitcoin, gold, buy what you can afford, shares or fractions of it with what you have now, so that you don't get washed out in a volatility cycle, because we're going to always have volatility again in this crazy fiat-based economy that's very leveraged and we've seen increasing volatility over the last 15 years.
Yep.
The only way you can protect yourself against that is to not be in a position where you can get margin called.
Completely. Amy, I've really enjoyed this conversation. For people who want to learn more about you, follow your work, where can they find you?
I'm on X, just Texas Runner DFW is my X account, and I appear on Fox Business too occasionally. Charles Payne's show, he's great. So usually I'll tweet out when I'm going to be on, so you can catch those.
Yeah, I hope people follow you. It's been really great to hear your insights. You've really, like I said, you've got your finger on the pulse of what's happening, and I guess we'll see what's next in this economy. But your advice is well heard by my audience. I know that. Hard, scarce assets, and it's great to see that you like Bitcoin. I love it. Thank you so much for checking out this episode of Coin Stories. If you're listening on the Fountain app, you can show your support and share your thoughts by sending a boost. Last month's top episode was a Bitcoin and macro hangout featuring Preston Pish, James Lavish, Susie Riley, and special guest Luke Groman. At Ryan Reynolds boosted 500 sats and said, "These hangouts are awesome. Please keep them going." I love reading and replying to your boosts, so download Fountain on iOS or Android today and make sure you subscribe to Coin Stories. This show is for entertainment and educational purposes only. Nothing should constitute as official investment advice, and you should always do your own research. My inbox is open. If you want to share feedback or guest suggestions, just reach out at natalie@talkingbitcoin.com. Make sure you're subscribed to the show and check out my free newsletter, nataliebrunel.substack.com. I'll see you next time.